Let's talk to Ronnie Chopra from Horizon Securities. Very good morning to you, Ronnie.
Good morning.
Right, in this segment we're going to do equities. Let's kick off with Barclays Bank. You've sent a very straightforward line chart. They've made some headlines with a hedgie coming in with a big position.
Yeah,
have they got it right?
I think so. They picked up 2.5% of Barclays, just over $1 billion, I think. And obviously Barclays over the last 12 months have been in the news for rather negative reasons.
Yep.
The litigation thing that's going on and Jess Steely having problems, whether he's still going to be here in the next 6 to 9 months, who knows. But yeah, there's a lot of value in Barclays, I think. I mean, they've underperformed the Stock 600, the financial sector, the European financial sector, along with Deutsche Bank. So these two banks, huge behemoths, but they've suffered considerably, and they haven't really participated in the rally in the equity markets. But I think this acquisition by Tiger Capital is a great move. Around 200 pence at the moment, Barclays are trading at. They've picked up from just below 180 in November, so they've had a little rally, but going back, they're a lot higher this time last year.
And if you expect UK interest rates to rise, there was some quite aggressive commentary recently about suggesting there's more than one rate hike on the horizon.
I'd be wary of. I don't think the housing market can sustain more than maybe 0.5% rise. The whole market would collapse. But just going back to Barclays, they've underperformed.
Yield?
At the moment, they're not paying a big dividend. But having said that, things are improving, and they will increase their dividend. Maybe not to the same extent as Lloyd's, but these are a truly global bank.
Yep.
I mean, they've streamlined their divisions. They've got out of Southern Europe, where there were a lot of problems in the retail sector. They're still big in the US, obviously, with their Lehman Brothers acquisition from 2009, which was considered to be the bargain of the century, but hasn't been reflected in the share price. I mean, these even a couple of years ago, these are trading around 350, and the FTSE's obviously gone up 30-40% from that level, yet Barclays has not participated in the rally. Also, major dollar earner.
Yep.
Fine, the pound has picked up to 140 now, but still it's well below its average of 155, 160, so they benefit from a weak pound.
Okay, so they should be in our portfolio. Let's move swiftly on to Dixons Carphone. Headlines yesterday, good Christmas numbers.
Very good Christmas numbers, much better than the market expected, and the shares went up 7%. These are trading at pretty much half the level of where they were 12, 18 months ago. They've been hit by the foreign exchange fluctuations, because they basically buy a lot of goods from Asia. So the weak pound has not helped them, and they had to take a big write-down in the summer, and they had that massive that profits warning where we can see that the share price fell from 270 odd to 170 in the space of a few weeks. But yeah, the results yesterday are very good. They're doing extremely well in the Nordic region and in Greece. Also in the UK, the telephone sales were great, the iPhone, and also margins are good. The shares did participate in the stock market rally yesterday, and along with the trading statement, which was positively received. Although it took a bit of time to really get factored into the share price, because early doors they were only trading maybe about 1% higher, but by close of play they're up 7%.
Right. So again, another one for your portfolio.
Oh, I think so. Yeah, definitely.
Ronnie, thank you very much indeed.